Good afternoon, ladies and gentlemen. We have a nice lady here, a new member, Lisa. This is a purely for new members, a introductory ACS, what we call advanced coaching sessions, two free complimentary ones that are given to all new members, and Lisa is certainly taking advantage of that. Welcome. Um, Today is Sunday, July 8th, 2018, approximately 12:06 p.m. on absolutely a beautiful, warm Sunday afternoon. I ran back to do this quick webinar, and we are going to basically attempt to help new members who will be able to listen to this on the Clueless Aid Trading YouTube channel when it's uploaded a bit later on. There are other videos for new members too on there, on the new member introductory video category. But it's always helpful for new members to spend a few minutes, a little bit of time getting used to the format of the charts and all the fantastic stuff that we do here at Clueless Aid Trading. Full disclosure, this is purely for financial education, not for any solicitation or advice. So welcome, Lisa. Lisa, you have both audio and visual, correct?
Yes, I do. Thank you.
Okay, fantastic, fantastic. So first, let me just run down to the basic stuff. Even though you've been with us about a week now or so, you're getting used to it. But let me just tell you, Clueless Aid Trading is basically has been designed primarily for technical, what I call tactical trading. Tactical trading, in the most simplest form, simply means that we try to remove the element of human emotion from our daily trading and our weekly trading and our monthly trading, or whatever the case may be. It is very hard to do. At Clueless Aid Trading, myself, Frank, the content originator, professional trader, I try to be as straightforward. I am very straightforward. Don't try to put in all the fluff and the bells and whistles and the snake oil salesman charm that many other trading services do. Like to face and explain all the realities of making money in all types of markets, financial markets here in the United States. So sometimes a lot of the things that are explained and told and suggested might not be to the liking of some of the newer members, but personally, I don't care, because it is to the benefit that I do not encourage bad habits, traditional, recurring mistakes, and all kinds of emotional, opinion generated feelings that creep into our daily trading every single day. I try to be as robotic as possible. My charts are designed that way. They have a very high accuracy rate. However, one needs to obviously understand the dynamics of it so they can handle the volatility that comes along the way. As I like to explain in the simplest terms, you will, very high probability, 70 to 80% of the time, back tested my record, you will get there. However, the market will take some detours, what I call fall off the scenic route, and do all kinds of stuff. Therein lies your trade management skills. And we have these advanced coaching sessions, training sessions, which are available for all members for a very nominal rate that people should take advantage of in order to manage that volatility and not give back everything that they were up on their lovely P&L based on my trade alerts and such. So what we talk about here is increasing the odds of winning, because that's really what trading is all about, increasing the odds of winning. And of course, you're going to have losses. I certainly do. But the more you win, your losses are minimized, and net, you are very handsomely profitable on your P&L as you move forward. So that's what we do at Clueless Aid Trading. It's really as simple as that. We try to cut out the emotional noise and stick to charts. Are the charts always going to be exactly right at exact point? I mean, at exactly the time frame that I'm looking at? Absolutely not. They would be if we did not have these type of structured, not random, structured volatility. Everyone likes to think they're random. They're not. These are computer generated algorithmic high frequency trading movements, not straight line movements, and they get there. I said the market was going to get here, and the market got there. And then we'll see what happens at this range where I think the market will, on a short-term basis, peak. Now, keep in mind this intro session, complimentary session, is not about long-term forecasts and all that stuff. I will be offering my usual 8 p.m. or 8:30 p.m. Eastern Standard Time weekend update. Very, very important going into next week. Very important with all kinds of stuff that's going on. And all members and free trial subscribers are free to attend that. This is simply a walkthrough, a quick one within the next 60 minutes, so that new members are able to start reading some of the things that I'm putting out there and acting on them and doing well. So saying all that, if volatility was not present and we didn't have these structured sudden movements, then I'll be basically doing 100%, 80, 100% on my options every hour, every 15 minutes. But it doesn't work like that. In reality, lots of zigzags. And a lot of new members who are used to the old traditional way of looking at the markets, retail traders, retail emotional traders, and a lot of institutions too, believe it or not, are still stuck to the old ways. And they're not going to budge. They're waiting for some perfect moment where there's going to be a confirmation that things are just going to be peachy. Nope, it ain't going to happen like that, ever. I'm telling you that right now. I said that 3 years ago. Because by the time something is so-called confirmed, the big sell programs come in and you are done. And that is something for a lot of new members who join Clueless Trading is a learning curve. And that's why on my first intro call that I spend about half an hour to 45 minutes speaking to everyone who comes into my service, I tell them that Clueless Trading is somewhat of a steep learning curve. Some people are quicker. Some people are adept at picking up these things a lot faster. And some people it takes time. And that's not a problem. That's why we try to help everyone as possible. That's why on a beautiful Sunday afternoon, in between running out and doing my stuff in the morning, I am spending this time to do this so everyone gets benefited. Simple. So the learning curve is something you have to accept. You have to accept structured volatility. You have to accept algorithmic high-frequency trading moves in the market that will decimate your profits within minutes if you're not vigilant. If you're not acting and letting your emotions run wild on the upside or on the downside, i.e. manic depressive moves, in other words, very happy, euphoria, manic, and then on these quick flash crashes, depression, well, the only way you can negate those feelings, and it'll never go away. We're human after all, and we're dealing with real money. This is not a paper trading service. Emotions are always going to be there. But the only way you will negate the negative consequences of those emotions and use those emotions as a positive stress factor, not as a negative stress factor, and this applies to life too, is by focusing very hard and learning how to trade these precision tactical charts that are produced on a real-time basis for everyone to take advantage of. Doesn't matter if you're a full-time busy professional or whether you are a sit-at-home part-time trader or a full-time trader. You will certainly benefit if you understand what I'm trying to show. That's it. So on that note, let me just walk people through, and then I'll take a quick Q&A from Lisa here. And I will, and remember, for new members, this is the first of the one. The second one is also complimentary. And after that, you guys decide if you want to sign up for the ACS, which I think is hugely helpful. No question about it. And read the testimonials on my website for where members attest to that fact and all the other benefits that they get from Clueless Trading. So feel free to spend some minute reading the feedback from regular members out there on my website under testimonials. So first of all, I use the proxy, the background, what I call in a kabuki theater, the actors are in the background before they come out, or any theater for that matter. You have I monitor very, very closely the 15-minute. Sorry. What did I do? Here's the 15-minute. Here's the 1 hour. I monitor a lot of stuff, but the ones that I primarily show are the ones which are cutting out a decent portion of the noise. The 15-minute being the loudest. In other words, you're going to see a lot more fluctuations. The 5-minute is going to be very, very busy. I certainly look at that at times. The 1 minute I don't look at unless at extreme circumstances. And there are traders who trade off 1 and 3 minute charts. And listen, one of the key things which I forgot to mention for all new members and free trial subscribers is, look, I am simply suggesting, based on my observation of the market, suggesting trades, putting out these precision alerts. I am providing a roadmap, a GPS tool. You are the one who's going to be driving that car. And the faster you drive that car, i.e. the more active you are, and the more horsepower you have in your car, i.e. more money that you are trading with, you better know how to drive and handle that car, because I won't be able to tell you every single minute when to press the accelerator, when to press the gas, and when to hit the brakes, and when to change the gear on a nice high-end supercar. You might be driving manual, so you need to know how to change the gear shift. So I just want to warn everyone that, look, these are suggestions, these are roadmaps. You're going to use your own style, your own gut feeling, other services you might be utilizing for information, which I think is very, very helpful. And then you're going to get the full benefit of Clue to Safe Trading. If you follow me blindly, some people do, they've done very well. But I believe that you should be I want to have my traders be a little bit more independent and react on their own too, instead of always waiting for every 5, 15 minute, every 30 minute for a direct update tweet on the market and alerts and stuff like that. So I just want to be very clear of that. It's very simple, but a lot of people tend to forget that. So I basically show the 15-minute charts a lot, and I see structures and everything I think in most cases a lot quicker than other people. So I highly suggest that you train your eyes to talk to your brain and when it's looking at visual charts. I'm a visual trader. I understand a lot about financial markets. My background for 14 years was on Wall Street. And not just that, I have a passion for international finance, global markets, politics, all kinds of stuff. Just the way some people have a passion for knowing what time LeBron is waking up to have a cup of coffee. Well, my passion is this soap opera, global soap opera that's played out every day, because it mimics life. So bottom line is that I don't expect everyone to look at the same things the same way as I do, but I structure my charts accordingly. So the lines and everything that you see are all either downtrend lines, they are levels, which are very important. Each level has certain merit to it, whether they are at supply zones. This one, for example, is going back to the 3rd of July, right? The holiday. And the market's open. I'm sorry, the week started on the 3rd. Sorry. No, what am I saying? Wednesday was July 4th, so we're closed. So this is obviously, I show the E-minis, the S&P 500 futures, the 15 minutes, the 1 hour, and I show the daily too. The futures give us a very strong indication what happened prior to the market's opening instead of looking at a static S&P chart. All you traders know that, because this way we have a reference point. Because in technical analysis, you have to have previous reference point where the levels were in order to connect these dots and these levels, so we know where the pressure points are. Supply points, demand points. Very simple. Demand points are buy zones and supply points are sell zones. Okay, as for supply, where the supply comes in or the sellers step in, and in the case of the futures market, there are hundreds of traders all around the world, especially in the Globex futures. So you're dealing with a pretty vast array of supply and demand. B is demand. This is where the demand is to buy, and that's the supply to sell. Really simple as that. So in the most simplistic way, these charts are not difficult at all. This is one of the platforms that I use among 3 others. I show primarily 3 of them. So you have to basically focus on them. To me, there's full structure to this chart. Even the breakout here, which I said was going to happen. Did I expect it to happen on the dot? No. Was I a little bit surprised? Absolutely. Absolutely. But were we positioned right prior to that? We certainly were. We also had some small hedges in the form of VIX calls, just in case things didn't go right on Friday after the tariffs took effect, both on the US side and the China side. And if we had gone the other way, those VIX calls would be up 200%. Instead, they were down about 60 to 70%, which is fine. That's a hedge. And who knows why the markets are going to open up tonight, because there was some funky stuff going on over the weekend. Read my Twitter feed to stay appraised. So bottom line is that these are, so there you go. Now, if I zoom back, and I don't want to make it too crowded, then you start to see the bigger picture. But instead of zooming back on the 15-minute, which gets noisier and noisier, so for a trader, it's much more difficult to focus on 15-minute candles going back and back, because things start to get noisy and you start to get these faded charts. So the structure is there. This is, so I would rather zoom in a little bit, but that's why we have technology. You just move the mouse wheel and you're just right there. Okay, so there's nothing really complicated about this. I do my hard work of drawing the structures over it, all the resistance, all the support levels, the different inverse head and shoulders, the bull flags, stuff like that. And you have to certainly keep an eye on it. And more importantly, you should go to investing.com. Like I tell everybody, it's free. Put in your email and replicate this chart. It is one of the easiest visual platforms to trade off. Easiest. Seriously. Because it's clean, easy to see. So in order for me to slightly look at the slightly zoomed out picture, I move on to the 1 hour chart, which gives me a reference point going back to the 13th of June. Here, you can see the date down here, 13th of June. So from the 13th of June, that's my last reference point, because as a technical and tactical trader, I am looking at the previous reference point where I can use it as a starting point to what is happening right now. I don't want to go back. Well, I do, because I show the daily and stuff. That's for the broader picture. But for a trader, I'm looking at the last most relevant reference point. So in my case, it was the 13th of June. And this is what it looked like. And boy, is it accurate. Now, this was the range we were trading in. Very clear. The 1 hour chart is cutting out the 15-minute noise. Remember, there are 4 segments of 15 minutes in 1 hour, right? Simple. And so you're seeing a more cleaner picture. This is pattern completion at 27.95. I have said in my videos, well, we'll talk about it tonight too, that's a low probability move. Can happen, but hey, all I know is we traded each of these swings to a pretty successful degree. And yes, we did get caught once in a while the latter part of the day when we had a very very sharp, quick 60-70 point move down on the Dow, 10-15 point move down on the S&P. But I also know, not just based on this chart, many other indicators I look at roughly 32 different indicators. I show about 3 to 4 to keep things simple. And on my advanced coaching sessions, the ones which for people subscribe to, I walk them through everything so they can use them at their own volition. So bottom line is, we were buyers in general all around these levels. All around these levels. Fact. For all new members, very important and critical. If you want to make money and you want to take full advantage of Clueless A trading resources, you have to follow and track the real-time Twitter feed. You can't be just breezing in every other day and saying, hey, let's see what's going on. This is not a joke, guys. You want to make some real money, and I've been making a lot of real money for a lot of people, ordinary people, who have written fantastic testimonials on their own saying, I'm just a simple guy out there from, the heartland, in the Midwest. And you've really showed me how to understand the nuances, the manipulations, the real story behind how U.S. financial markets and Wall Street works. And I say it's my pleasure, because there's no hidden formula. Yes, I use certain tactical methods and discipline, but there's no hidden formula. Oh, I have an algo that's going to just work out everything. That's all hogwash and lies. And many servers propagate that in a big way. There are certain things that I have which I don't share, because that's my proprietary, not necessarily information, but my proprietary way of looking at things. And I do share some of them on my advanced coaching sessions, the paid ones. But if there's no secret that I have, other than the fact that I'm probably a little bit smarter than other people when it comes to markets. And maybe I'm a little bit smarter than other people in reading the behavioral aspect of the market. Yeah, I'm a heck of a lot smarter than most people when it comes to understanding the behavioral aspect of markets, because I dealt with clients, institutional and high net worth clients, for 14 years of my life and more. Okay, so I know every single emotional reason that anyone can give me, and how institutions also behave at certain extreme conditions in the market. So yes, I'm very good at that. I can read people on the phone in probably the first 10 minutes. So saying all that, the bottom line is that we were pretty consistent buyers at these tactical lows, both on this very sharp inverse head and shoulder double barrel bullish engulfing candle, bunch of times, and each of these lasted anywhere from 24 to 48 hours. Given this extreme volatility in the market, most of the returns were had within 24 hours, and then you had to reset. That's what markets do. I don't control the extreme volatility. I don't control the tweets coming out of the White House, or the announcements coming out of threatening comments coming out of the Chinese or the North Koreans. I don't do that. I mean, I can't control that. I adapt to it, and I use that moment of mini crisis to profit from it. So bottom line is, at least people know what the lows are. You have to, that's your job, to go ahead and learn the patterns and all that stuff. I have two great videos in there, but there are fantastic resources on YouTube about understanding chart patterns and things like that. A lot of them are just traditional way of explaining it. I use it, what I call version 3, adapting to the algo version of looking at things. But the patterns are the basic patterns never change. Whether they be head and shoulders, inverse head and shoulders, megaphone patterns, which I'm very good at, by the way. Very people show megaphones that well as I do. I showed this megaphone, and guess what it did on Friday? It blew through the megaphone, straight through. Boom. Somebody said, whoa, look at that. A lot of new members will join and listening to this. They have never seen a megaphone. They think it's a megaphone out at a pom-pom rally, cheerleader rally. No, it's not. These are megaphones which put serious money in your pocket. So anyway, downtrend lines, major downtrend line right there. Part of the lingo that I use, which I'm going to abbreviate more and more for the sake of putting more precision content out there, you will find under members area, dictionary. So DT line, for example, is downtrend line. Instead of saying yes, I'm just going to basically abbreviate things a lot quicker, because things are moving a lot quicker. So get used to understanding the quick abbreviations and the shorthand for my alerts that are going through, which will be going through more and more. They'll be shortened. Okay. So anyway, so that's it. So at this point, looking at it simplistically, we were in a tight range. These are the outliers of the range when we fell apart and had big bullish reversals, bullish candle reversals. That's a sign that the market is a coiled spring, wants to go higher, and the market did go higher. What it's going to do right now, we shall see. We have this level to fill. I don't want to get into too much here. I'll be explaining all that stuff tonight. But you can see what the roadmap is and how you need to react to it. There's your 1 hour chart. The third one that I use is basically populate this here. to keep people focused on the bigger picture is the daily. So we're zooming out more, right? So the daily is cutting out all the heavy duty volatility noise of 15 minutes, 1 hour, 15 minutes, 30 minutes, 1 hour, and all that stuff. And if you look at the daily, it's pretty, this is how you stay in a swing trade. Okay. This is where you don't freak out because the market pulls back 30 points in 2 minutes because of something out there. This is what keeps you in a swing trade and gets you those Regeneron type of returns from the original alert at $1 to $2 to $28. $1,000 would be $28,000. $10,000 would be $280,000 just from the middle of June. That was the original alert. And of course, we kept on moving the strikes up as it went on. Regeneron. Is that the only example? There are many examples like that. Does it always happen that quickly? No. But boy, we delivered it. And if you guys didn't profit from it, take full responsibility for it. It's your fault. What you don't make is what you lose. Rule number 1 in trading is not about sitting aside and waiting for the perfect moment. Rule number 1 in tactical trading and profitable volatility trading is to be engaged almost at all times, but managing the acceleration level and position sizing. Do you want to press really hard and buy more calls, buy more shares, or do you want to ease back a little bit and have some token position? If you do not have a token position, you will never catch the moves. I didn't say that. There are the legends of Wall Street have said, if you're out of the market because you think the market's not good, you will miss out the biggest days on the market ever. And I have seen that happen over and over and over again. So you need to have some exposure. That's just the way it is. So looking at the daily picture here, you can see it very clear. Here was the range. Here was your neckline breakout. We slipped below that. I kept on showing that this is a support level right there. The red line, 2,700. Then we have the wide channel here. This is how you read this chart. You have the macro channel. And we are still, through all these shenanigans, all the heavy-duty risk factors affecting the market, from China, from tariffs, from North Korea, from Europe, from Asia, from us, from the U.S. Interest rate fears and what the Fed's going to do, and all kinds of stuff. Algo flash caches. Through all that, we are still within this macro channel, which is still intact over 2680. And we can get there. Trust me. 2680 or thereabouts. This level here. So if you keep your emotions in check, you will inevitably not sell at the wrong time and consistently making losses. Now, I'm not saying everyone should swing all the time and just keep on holding things. No, I take a lot of short-term profits. We have a big gap open. I take most of my profits down and then I re-enter, or I keep a token amount in there so I can add to it. I'm always engaged. But if I have large profits, why the heck am I not going to take it? Let's say you have 4 calls of an S&P thing at $6 and it bops open to 11. You're up $2,000 on that one trade. On that one trade alone, what are you going to do? Just leave everything alone? Take at least $1,500 down or do whatever you want. And then it swings and turns around and goes higher on a trending market. Now, that is the next segue that I just, we're going to get into. Trending. This is not a trending market. The only trend is that the market is moving between structured tactical levels. This is not a market that does this. That is only if you zoom out more and look at the weekly and the monthly. Even then, there are cracks in the market. If you look at a monthly chart going year over year, yes, the acceleration channel is still on. And I've showed that a few times. But as traders, at least for me, I run it as a business. I have to get income out of it. That's how I pay my bills. So I don't have the luxury sometimes on the income part of it, the business side of it, to sit on things forever, other than the longer term investments or longer term stuff. And I'm sure that applies to many of you too. So bottom line is, this is not a trending market like this, at least not on the daily. You had the big crash in February where everyone said, that's it, it's all over. We played this like a fine violin, Stradivarius. Okay? Did we make money on every single candle? Absolutely not. But for a lot of new members and free trial subscribers, you want to know, and some of them ask me, how do you do in difficult markets? We actually tend to do very well in difficult markets. Sometimes I do less well, or my returns are moderate when the market is just trending like this. Even though I play momentum on a regular basis, Netflix is prime example, Amazon, things like that, I don't like chasing prices higher and higher if they are beyond my technical picture. So saying all that, throughout all this, we are still within this macro channel. And I show on this particular chart, which all of you new members need to focus on, that it looks likely, this is a megaphone, right? Tilted down megaphones can be like this, or they can be like this. There are also different names for these patterns. This is your bull flag triangle consolidation that I called extremely well back in the month of May. So great people like Lisa and a whole bunch of other members who will be listening to this, new members who came in within the past week to 2 weeks, don't know. I called this repeatedly, even when we slipped out of it. That one candle was one of those 400-600 point days down. But I was watching things and I told people like, okay, we need to, it's still there, guys. It's going to get sucked into that bull flag, consolidation flag, and it sure did. And it broke out like a monster. So if you were not set up at these levels, and I'm not saying at exact crisis levels down here, which I tend to buy, I put my initial position down there, even though I should, honestly, that's the time to be the most aggressive. But it's difficult because you don't know whether it's going to pull back and test the 2018 level or not. That line is the 2018 level, I believe, where 2018 began. So anyway, or whether it's going to pull up. But if you're not positioned at these levels, you will never, ever make the real money when this happens. You never, ever make the real money buying at the top here. No, because right at the top of the megaphone, I have a very strong suspicion that the market is going to basically at that point do the same thing, pull back again. So this is how you read the charts. We're getting overbought. We're getting there. You have to watch the stochastics. I can't teach anybody A, B, C, D, E, and every alphabet of every single aspect of technical trading. That's your job to learn. And if you really want to learn it and you want me to train it for you, good. Sign up on one-to-one sessions. I'm going to walk you through from the basics up for brand new traders. I'd certainly do that if I'm going to spend my time doing that. I'd be happy to. But you obviously need to pay for that. Other online services charge you thousands and thousands of dollars. Some charge $24,000 plus. Not going to name any, but the big ones, just to teach you the basics of what a chart looks like. So that's it. So there's your monthly chart. Then I sometimes go out to the weekly just to keep people's SPX weekly. Again, looking pretty damn good. Big downtrend line here, just slightly above where we are right now. But those 12, 13, 20 points in the S&P handles can make you some reasonable money. I try to do the structures so you can read them well. Here's your, full stochastics, all that stuff. The second thing that I use is, which I use very consistently, is is Thinkorswim. Many of you use Thinkorswim. This is your daily chart on Thinkorswim. Fantastic. Fibonacci retracements. Look up the definition, what it is, and all that stuff. Stochastic crossovers, where the trigger happened, which was actually on the 2nd of July. I was basically showing this. The full stochastic starting to curve, starting to bottom, well ahead of the market doing it. Well ahead of the market doing it. Did I know that the crossover was going to happen? No, But was there a higher probability that that was going to be the case based on the fact of this inverse? This was a head and shoulder, head, bearish pattern, right shoulder, right shoulder. Well, guess what we did on Friday? We broke up above the right shoulder. And I knew that was going to happen, but this could have also happened because that's what. So a bear and an atypical retail investor will read this as a negative, and I look at it as a market agnostic neutral. Let me be positioned right, so if the market does decide to pop and break out of the right shoulder and head towards the downtrend line right there around 2776, roughly another 20 points or so, where we closed out on Friday, which means about 100 to 120 points in the Dow Jones, that's going to be another sell zone. Or who knows, maybe it breaks out of it. I don't know. But I showed the most important, and for all new members, guys, focus. Guys and girls, focus. Okay? Go through my new member introductory videos. Go through my regular update videos. And start to understand, because I explain in pretty reasonable detail for free on these weekend updates and stuff, what I'm looking at. It's not rocket science. Don't overthink the market. That's my job. Do whatever you want, but don't go into this analysis paralysis mode that 99.9% of retail emotional traders, and including maybe most of you listening to this, go through. You cannot ever be 100% robotic. God has made us human. That means we have feelings. But use those feelings in time of maximum distress. Doesn't matter how much your account is down because of no fault of yours. And no fault of the charts. And fault of other external factors out there. To ever quit. Because within a day, your account could be up 150% from being down 70%. Net. I'm talking total account value. And if the smaller your account is, the better off your chances of doubling and tripling it within reason. The bigger your account is, you're not going to be doubling and tripling that account. You know why? Because the larger your account is, the less risk you're going to take, especially in volatile markets. And if you really take big risks, well, God bless you. My hat's off to you. Because this is a quantifiable risk game. So for all new members and free trial subscribers, options trading, even stock trading in US financial markets and global markets is about risk. Quantify the risk. Identify the risk points on these phenomenal tactical, Clueless Day trading tactical charts that I posted out there. And once you can quantify your risk, your P&L is going to be consistently, in my opinion, will grow. And after that, you add in your emotional factors, your diaper changing habits. Well, that's it. That's a sort of a shorthand for our trader term of saying, like, everyone's changing adult diapers. Nobody's touching the market. Market's down 600 points. I'm showing constantly that you got to buy it. Everybody's in the bunkers. Nobody's in the chat room. Those are actually the best times to buy the market. The worst times to buy the market is when everyone's too excited, because that's when they made the most money, or didn't make, or they're coming in late. Those, psychologically speaking, from behavioral finance, those are the times to short the market. We're not there yet. We're far from it, but still. So that's it. Thinkorswim charts. The other charts that I show, which are extremely advanced and extremely predictive, well ahead of the game, are the Algo HFT charts, which are run by a platform called Quad. The charts are devised by bar charts. I have a whole video, hour-long video on Quad, QUODD, and Algo HFT, short for Algorithmic High Frequency Trading Charts, on my YouTube channel. This is it, ladies and gentlemen. Okay, you've seen this many times. You don't know the power of this. This is one unbelievable, if you know how to read it, advanced charting, i.e. big money tactical chart. This is a big money tactical chart, guys. So it's not for kids. Most retail traders, forget emotions or not, are not used to making big money in the market. So when they get close to it, they're scared, and they always sell early. People say, wow, that guy won 700 million on the lotto. Most of the times, if you read their history, within 2 or 3 years, they've lost all that money, and some of them have committed suicide because people don't know how to deal with big money. They don't, and neither do retail traders. But once you start tasting it, once you start managing it, what I try to do personally, and listen carefully, I try to keep an even emotional keel, not get overexcited, not get over sad or despair and scared. I just try to keep an even keel through good times and bad times. Many of you, I'm sure, have great personal ability to control your emotions and have gone through many stresses in life. I have. Maybe that's what makes me what I am. So very few things really bother me. Am I scared sometimes? Absolutely. Do I use it as a positive reinforcement? Absolutely. So aside from the behavioral start, this particular charting platter is absolutely fantastic. The slow stochastic has been a consistent winner for us over and over and over again. And I don't care what the news is. Now, reading the slow stows overall can be a little difficult sometimes during choppy markets. Through this whole entire chop, okay, each level put, the pivot lines are in the dotted yellow, the gap fills. I even put markers. Honestly speaking, a child who is not over analyzing can trade this chart. Each of these candles are good for 30 to 40% on your money. A big candle like this on the and we have shorted sometimes midday, immediately you're up 30, 40, 50, 60, 70% or more. This candle alone is good for 60% on your money. And then forget this breakaway over the gap, heading towards some pretty severe resistance levels. Shown not yesterday, not on Friday, not on Thursday, shown all the way back with all these lines drawn. This chart wasn't created after the fact. It was created before the fact, so you can reach your promised land, and knowing very well what the pitfalls are if you pull back or not. And the best part is I guide people through it every single day. I don't think there's any service out there, I'll stand by it, which guides traders, full-time or part-time traders, the way I do. It's almost babysitting on it is beyond babysitting. It's tactical babysitting. All right, ladies and gentlemen. But I do it and engage with my members. I enjoy it. And we have great people. And we want more great people to keep on spreading the word out there. So bottom line is, when the slow stows turn, they generally get a quick, sharp rally, which generally comes about within 24 to 48 hours. Every single time. So it doesn't matter what CNBC is saying, doesn't matter what tweets are coming. I'm watching this like a hawk. Now we're overbought. Does that mean we're going to completely crash and burn all the way down here? In other words, the market's going to come back and retest, give back about 200 points? Yes, it most probably will happen this week. Does that mean that everyone's going to be freaking out again? Yes, they will. And what we will be doing, we'll be looking to see if this downtrend line here, okay, and that's why these are amazingly beautiful charts, great to look at. The larger the screen you look at, the more you shall see and the more you shall benefit. All right? You're looking at a teeny-weeny little 5-inch, phone, or a Samsung phone. Or I just cannot stand Samsung phones. I'm just kidding, but seriously. So you want to look at it. If you're on the move, you want to look at it on an iPad. You want to look at it at an iPhone 8 Plus and iPhone and the new iPhones coming out, which will have 6.5-inch screens. I just can't wait. The bigger the screen you're looking at, I have 12 to 14. I have 14 actually. I use 12 screens primarily. Large 24-inch screens, not 27-inch. I have two 27-inch, but 24-inch screens. I see things clear as daylight. If you're sitting and looking at these things during the day, you better have a screen that you can see. So bottom line is, around here, we might get that full reset. We don't know. While everyone's panicking, we'll see how these trend lines behave. I'm not going to go into some real technical detail here. 3450, the lower end of this was actually a megaphone. But uptrend line, gap fill. Here's another gap fill, which most probably will be done very quickly. I'm telling you right now. So bottom line is, I get to see things, and of course my experience and whatever it is, I share that with my people, with my members. But you have to understand what I'm showing, right? Because whether it's going to do this and then do this, or whether it's going to bust a move here and complete the pattern, the last leg of the pattern, the final leg is the 2800 level on the S&P. That I don't know. But I am moving. I'll be so ready. It's not even funny. I'm always ready. So on that note, I'm not going to keep. I've explained to you the most relevant points of clueless day trading, and I will go ahead and ask some answers any basic questions Lisa has and wrap this up. It's 12:51 p.m. right now. Miss Lisa.
Thanks, Frank. That was a great overview.
Go ahead, ma'am.
Really enjoyed it. And you answered a lot of my questions in terms of why do you use the stochastic specifically? Obviously, there are a lot of different oscillators that
many
traders can use.
Or you can use the McClellan, you can use a thing. And a lot of these details, just to give you a quick snapshot, these are what I explained on the ACS sessions. People find it fascinating because they never looked at it that way. Is the stochastics is that basically it's like a daily drive car, right? So we love we're big car people. So if you have a supercar, let's say Lamborghini Huracan or Performante, whatever those cars, okay, you can be daily driving it to the grocery store. So you need a daily drive car. So the stochastics, the full, the slow, the fast stochastics, those are daily drive indicators. Okay. So for a daily drive car, you want something small. You want a nice truck to move around, a nice SUV. So that's the difference. The ones which are the more extreme ones, which should be looked on at extreme conditions, are basically the non-daily drive indicators, which are the McClellan oscillators, the Vortex Index, all kinds of ones. There's quite a few of them. So go ahead. But the stores are basically the ones you can watch literally at any given time and benefit from it. Yes, go ahead.
I really appreciate that you're a bigger picture, visual pattern trader, and you provide that depth for members. I've really enjoyed this past week with you, and
thank you.
It was profitable for me, so I do.
Which by the way, let me stop you.
Mm-hmm.
Okay, I'm going to add one thing. It's more enjoyable because it was profitable. And I know the type of character that you are, and take it as a compliment, Lisa, that even if it wasn't profitable because of some slip-ups that happened at the last minute, you would have learned a great deal from the from what I deliver. But the fact that it was profitable makes me extra happy for you. You know what I'm saying? Because a lot of traders, and this is a very important point that you broke up. If you allow me, I'll just mention one thing to you. I'm a real straightforward guy. It's like what you see is what you get, right? That old term on the computer term, WYSIWYG. And New York style, sometimes I'm very blunt. So I'll tell you one thing. I don't care who judges me on what. I know what my performance record is in the most difficult markets ever and what I have done to guide my members and people. So if somebody joins us as a free trial or as a new member, and then loses a little bit of money because of things that happened in the market, and most of the times it's because of their own stupidity, because they didn't really quite catch on to what we are doing, and in some cases because of the volatility, these sudden swings. Remember one thing, that has nothing to do with the quality content that I am providing. That is something that you take responsibility for. So what Lisa said right now, I'm basically giving you a more philosophical explanation to this, is I'm extra happy for her because she managed to go to these tactical swings, understanding the basics of the chart, things like that, and reacting to it and making money. But even if she did not make money that particular first week with us, I am sure, knowing, and that's a character of a true trader, she would not be pointing a finger and saying, that's all crap content, this and that. No. She would still say, you know what, I'm still going to join. So that's the type of people we want as members of Clueless Day Trading, who are not judgmental. Am I going to take constructive criticism? Absolutely. Am I going to take hogwash criticism based on emotional factors? Nope. I will at least put on my defense. So go ahead, Lisa. Great point you made. And I wanted to point that out to everyone else who's going to be listening. So thank you.
No, I agree with you, Frank. I appreciate, and I think all your traders probably appreciate your bluntness and directness. That's
Most
too many services are like wishy-washy and like, oh no, and they're always, and they always after the fact are always right. Oh yeah, I knew that was going to happen, but you're not. Yeah.
Oh no, go ahead, man. Finish your sentence.
You're totally not that way, and anyone who joins you will quickly figure that out. And I wanted to ask you about your I guess. I just need to know a little bit more of a qualification on your Twitter feed, because everybody,
of course,
who's a member gets to be on the private feed, for people who are listening.
Yes.
So, when you make a recommendation or suggestion,
yes.
Obviously, I agree with you. We're all in charge of pushing the button, not you.
Go ahead, of course. Go ahead.
Yep. All right. So when you make a suggestion, added,
yes,
XYZ, and then you suggest the calls to look at.
Mm-hmm.
And if, since I'm new, still relatively new, obviously.
Go ahead. No, feel free to ask any open question. I'll give you an honest answer.
Right.
Yeah, go ahead.
Right. Are they, can I assume most of them are swing trades that you've already, like you said, you've been monitoring, the REGN for over a month, which was stellar. I mean, everything you picked up.
It's still going, by the way. It's still going higher. Now it's still going high. And you see, if you look at my charts, you'll see where it's going. Basically 397, 400, and God knows if it breaks out like Chipotle, like we call Chipotle at 280, after trading it pretty consistently. But from 280, look where the stock is. So yes, so finish your sentence and your question, and I'll answer it. It's a very good question.
Well, I think BMRN was one of the suggestions that you had made on Friday, and I think that's the first time that I saw it. And I don't know if maybe you had it before.
Oh yeah. BioMarin, we have had it, and rolling over the strikes. Okay. We have made short-term profits, but that's one of my longer-term holds, what I call the biotech basket. So it's there. So go ahead, finish your thing, and I have the answers to. I know what you exactly. I'm reading your mind, what you're going to ask. So go ahead.
Well, I was just trying to figure out, when I see things like that, earlier in the week, when on the free trial, I didn't take all your things. I was just kind of watching it to see what would happen. And then
that's smart.
And then
go ahead.
And then you look, 2 days later, and you're like, oh, darn, I wish I would have done that, but.
I know, exactly. So.
And then it's the and I'll obviously sign up for some private lessons with you on,
no problem.
And internally, monitoring, well, how much profit do I look at before I decide to take? I mean, your spot, I have 49% profits in the Spotify options now. I didn't take them yet, and so I guess it's just more of.
So let me answer your question. Yeah. The questions that you're asking are basically a real. These are real questions, guys and girls. Whoever listening to this, listen to this. The questions Lisa's asking is coming from a person who is a real trader. Okay? It's coming from a person who's not trading with millions of dollars. She's trading with thousands of dollars, and she's looking to make much more thousands of that, if I'm correct in saying. Okay? So but what the questions she's asking are very relevant to the reality of trading. Here are my direct answers to it. Just like in life and in trading, there are no black and white answers. There's lots of gray. The gray part of trading is what we call risk management, based on position sizing, based on time frames, based on the type of stocks you're looking at and trading. Netflix, Amazon, Tesla, which is on the extreme end, are high volatile, high momentum stocks, okay, which are always played on by, and I've repeated that repeatedly, by there's a list of about 20 stocks which are constantly day trading stocks by some of the smaller and biggest hedge funds out there. They're constantly trading it. That's why you see them pop up in 10 points. You move your head within 15, 20 minutes of the first round of profit taken, they're down 3 points. You know what I'm talking about. So there's a lot of high beta momentum stocks, primarily on the tech side, some of them, few of them on the biotech side, that are constantly traded. So that gray area of trading, which requires learning and practice and losses and then lots of gains, is where you have to know the risk management, the position sizing, and these things you see people say, oh, read that great book about trading. It's all garbage. The only time you read a book about trading okay, is when you want to hear about what somebody did in a market which is no longer existent. Seriously, they've written great books about trading. The philosophies of trading don't change. The behavioral greed and fear and greed part, right? And the euphoria and the despair part. But the dynamics of trading are totally different. Totally different. I teach all that. That price and volume no longer is a clear indicator of what will make you the profits. So what you're asking is basically the mechanics. It's like taking off the hood of that car and then looking at all the turbos and looking to see what you can change and tune the car. Okay, so those require, so it depends on the type of stocks you're trading. The biotechs have different characteristics, both in options and their movements. And everyone says, oh, all biotechs are the same. No, they're not. Now, what I try to do, and we are in the process of doing that because we're always in the process of self-improvement and content improvement. And I've been trying to do this in a more proper way because I don't want people to be guided in and out of a trade. The reason I'm saying that is, number one, I am not running your book. So what happens is somebody says, hey, why don't you just put exactly what time when you came in and get out? I pretty much say it, but I'm not going to tell you exactly when I'm selling off everything, because the God honest truth is I don't exactly sell everything at the same time. But I'm giving you the parameters depending on the size of whatever you're doing, and that stuff you can discuss on the private ACS sessions as to when you should be taking most of the profits down. If somebody's put $400 and they're up to 600, they're more liable to just let it run. They're up 50%. Somebody puts in $4,000, they're up $6,000, they're more liable to basically take at least half down. Somebody puts $40,000 and they're up to $60,000, and we have traders like that. Okay, $60,000, let's say in 2 or 3 positions. What are they going to do? Just leave that 20,000? No, they're more apt to take a lot down. So I don't know what size somebody's trading with. I don't want to know unless they do the private ACS and privately want to discuss, and I can give them some very helpful suggestions on how to manage smaller accounts or bigger accounts. So that's why, like I said, what we are trying to do is I'm going to put some of the categories of stocks which we tend to that we tend to basically day trade more. Category of stocks which we tend to swing trade more. Now, if you go to my Twitter feed, you do get an idea of that. And some of them become from day trades to swing trades because the chart structure has changed. Spotify, I used to just day trade or at least trade 1 or 2 days, but then it became a swing trade. Now, that doesn't mean that it can't be down $4, which it was on Friday, right? I mean, not Friday, a couple of days. All of a sudden, it's like somebody's just sitting on it. But everything on my charts showed that it was going to pop, and boy, did it pop. Was there any news on it? No. But if you notice what that the previous 2 days, it was just like sitting there, it just wouldn't budge. You know what I'm talking about. So the point is that stocks do that. So that gray area is the one that people have to learn and constantly keep on adapting. So that's the answer to your question, which was a great question. So there's no one line, salesman answer from me. I'm giving you the reality of it. There are certain things which look good on the swing side, and in the most simplistic way, the ones which look greatest on the swing side, just so you guys know, are the ones which I have identified way off the bottom, well before Wall Street and other services and stuff have even picked it up. Whether it be Chipotle, whether it be Ulta Beauty, whether it be Regeneron, whether it be VMware, these stocks were in the gutter when we were buying it months ago. So that's the answer to your question, Lisa.
Okay.
But you'll certainly get a heck of a lot more insight when you sign up for the ACS, because then I can basically discuss things privately. So, hey, listen, I'm dealing with this. I can give you a suggestion. Okay, maybe this is the allocation you need to do, because I have to walk a fine line, because I'm not here in the advisory business. I was that a while ago. Okay. And so that's not my business. My business is to suggest good strategies to do things, and everyone will use it at their own will. So on that note, does that answer the question in a fair way?
Yeah, that's fine, Frank. Let's wrap it up.
Yeah, good.
It's been great. Thank you.
Thank
I
you
really
so
appreciate it.
much. I'll put this up on the YouTube channel, and hey, if you can stop by, I'm going to do it at 8:30 p.m. because it's summertime, and so people can the West Coast can join in too. It's been very interesting to see how the futures open up and stuff. There were some developments over the weekend which are not necessarily positive, but neither too dramatically negative either. But still, we shall see. Thank you so much for attending, Lisa. Fantastic. And definitely get a lot of referrals, great people like you. And as long as you have an open mind, you're going to learn a lot at Clueless A Trading. And that's basically what it comes down to. You will never look at the markets the same way like you did before. And hopefully it'll be a rewarding experience for you and for all other members. Have a great afternoon, and see you guys later.
Thanks, Frank. You too.